In recent years, Australia's debt capital markets have become of age, transforming into a premier strategic funding hub for both local and global issuers. Australia now benefits from a large and active bond market with over $2 trillion of outstanding debt issuance from international and domestic corporations as well as governments. Last year, Australia's capital markets printed a remarkable $320 billion in debt, ranking Australia as the world's third largest market and cementing its position as a funding powerhouse in the region. No one factor explains recent market development with the powerful confluence of stronger liquidity, de-dollarisation, higher yields on offer, demand for diversification, regional supply shifts and the growth of exchange-traded fixed income funds explaining some of the change. With markets more conditioned to bouts of volatility, $8 liquidity, pricing and the breadth of issuers coming to the market remain incredibly positive, notwithstanding the market backdrop. 2025 saw a record $32 billion of issuance in corporates against a number of orders of $120 billion. Already year to date, issuance for corporates in Australia is $24 billion, up 60%. $8 MTNs now account for 67% of the $36 billion equivalent of all public global bonds issued by Australian corporates. Foreign entities across supranationals and banks, traditionally reliant on US and Euro markets too, are increasingly turning to the $8 market, with many now counting it as their third key funding hub. So-called kangaroo issuers account for 21% or $67 billion of total bond issuance volumes in 2025, their strongest showing in 5 years. This has been supported by kangaroo deal order books growing by a compound 14% per annum since 2022, according to recent market estimates. Ultimately then, the rapid growth of the kangaroo market highlights the impressive depth of the Australian financial markets and the world-class regulatory frameworks and clearing system infrastructure that supports them. The next point I'd like to discuss is the role of Asia. On the point of Asia's contribution down under, a special comment is applicable here on the issuer and investor side. While traditionally dominated by Northern Hemisphere financials and supranationals, we are now seeing green shoots emerge via rising Asian kangaroo issuer representation. Borrowers such as MTR Corp, who are here today, whose cracking debut $2 billion green bond in January saw orders of a whopping $12 billion. BBB rated Republic of Indonesia, whose $800 million debut in 25 was 10 times oversubscribed. Various Korean kangaroo issuers who, after raising $2.5 billion in 2025, have already issued $2.7 billion to date, and again are set on for another record. These have all successfully tapped the local market in recent times. Asian investor participation is also not new, but it's also a key explainer of the success of the local market. This dynamic has transformed significantly. Rather than simply viewing Asia as a geographic flyover, Australian and global issuers now actively court the region. As for the road ahead, with major Asian investor pools anchored in Hong Kong and Singapore, we expect this momentum to remain in $8, which has now been assigned a more permanent place in their fixed income portfolio holdings. BOC also anticipates having greater participation from mainland Chinese investors who over time are increasingly accessing southbound connect mechanisms which facilitate quota-driven offshore capital movements from China.